Hello everybody, welcome back to another F45 trading market review for the week of September 2nd to Friday, September the 6th. Time of this recording is actually September 1st, so summer is officially over after this weekend. If you're in North America, obviously there is a holiday Monday. Hope you guys all have a great holiday weekend. Looking at the news events for the week, it's going to be a pretty turmoil week after about Wednesday. You can see all the news items lining up here on Wednesday. High impact news events for Canadian dollar with the Bank of Canada rate statement. We've got FOMC members speaking starting at 7:25 a.m. New York time, and they continue throughout the day on Wednesday. And going into Thursday, we have ADP non-farm employment change, ISM manufacturing, crude oil inventories Thursday, and then Friday, obviously, NFP. We have all the usual suspects for the Canadian dollar and the US dollar, with NFPs starting at 6:30 a.m. New York time. And then wrapping up the end of the week will be Fed Chair Powell. So ideally, and we do obviously have bank holidays, Canadian and US dollar bank holidays. If you're in North America, it's a day off. Across the pond, obviously, you business as usual. So we could see a little bit of movement in the markets Monday, Tuesday, but myself personally, I won't be taking part in anything past Wednesday. I might even just take this whole week off just because there's lots of trading coming up. It is September 1st, like I say at the time of this recording, and the fall months are here, and regular trading should pretty much resume fairly shortly. So hopefully you guys can cool your jets, study this week, and come out swinging next week with the markets in full force. So that being said, I'm going to jump into the charts here and look at the US dollar. Last week we had a nice big push. Monday, Tuesday, Wednesday, Thursday, Friday, all up days with the exception of Tuesday. We had a bit of a retracement back into the range of Monday's candle and just exploded from there. So looking at the weekly candle, chart, we've got a big area up here. I'm going to pull this, whoops, because it's relevant now. So we have a bit of a gap in here that I'm sure has been on everybody's radar. Starts about 99, call it 99 even for the dollar, right there, and it goes all the way up to just shy of 100. So we're pretty close to 100, but I'll put it basically as this low in here, and that low there comes in about 99.79 or 99.80. just to keep numbers nice and even. So big push up into here. Now I'm looking for expansion. We could see some interesting movement, and this is why I'm saying for NFP, anything could happen. We could see the market try to dive back down during Friday's news, or it could just keep shooting straight up. So we're kind of getting into this range up in here where we should see a little bit of resistance in this area and may see some pullback. It may be short-lived, of course, because there are some areas that I'm looking for underneath this level here, and it could come back into the range in here. But I think we're probably going to see a pretty bullish week going into the first week of September, and I can't imagine seeing it's going to drop a whole bunch until Friday. So it should be trending fairly nicely for the week. But I think ultimately, and if it's not this week, probably into next, we'll probably see it up to the 99.80 figure, sort of what I'm looking at here. Now, if price decides to fall under 98 even, I guess we can say, then we could see it returning back into the range, in which case it might want to try to get under these lows in here, which I have marked up here. It's looking pretty bullish, though. I would expect this to continue. So just watch for that this week. But look, I wouldn't expect this thing to trade back down under 98.40, so to speak. So sort of right in here, I would kind of like to see price stay above this area that I've got up in here. So that's between this red line, which is 98.65 and 98.40. I'd like to see price stay above that level, and really start making a run up into here. Now, if that's the case, then you can obviously look at opposing trades on EurUsd or pound dollar. So starting with the Euro USD, I've got the same levels marked out. We have the same gap in price. This should be on everybody's radar. If it's not, get it on there, because this is where price will be headed. Now, again, we could see a little bit of retracement starting out or into Friday. If we see this thing start screaming down into Friday, expect Friday to hit the low, and then we'll see a pretty massive pullback. Or the opposite, we could see price start to trade up and then roll over, and then I'd be looking for lower prices to finish off the week. But ultimately, I believe we're going to continue down. Big sell-off last Friday, and I would expect more of the same going into the week. Now, from current location, if price did, let's say price came all the way down and filled in the gap at the high of that candle, that's about a little over 200 pips. So very, very nice weekly range. Again, it may not get all the way down here this week. Could be next week, but I believe here in the near future, very, very near future, we'll see price a couple hundred pips lower on Euro USD. And then from there, we'll have to wait and see. Is it going to want to try and get under these lows here? Maybe. Or we could see a noticeable bounce back up. So we'll just have to sort of wait and see how that pans out. But and I'll just let you go and do your own research on seasonal tendencies and where it typically goes this time of year for the next 3 quarters. And just so you know, you should be looking and taking the last so September, October, and November. I would be looking at those on overall history and just sort of seeing what they do and how they trend, just so you can familiarize yourself with what is to come. And because 9 times out of 10, a lot of times the year pans out exactly how those seasonal averages weigh in. So just keep that in mind. So anyway, looking for further downside on Euro USD. Although depending on how we start out of the gate, at the time of this recording, it's late Sunday evening. So we could see a slight move higher, and I would expect if it does come up higher, it wouldn't get much higher than 110.25. I would imagine we're probably going to see it running to the downside, and that basically just comes sort of up into here, back up into this range that it ran down on Friday. But there is a very strong likelihood this thing could just keep sinking down, so just keep that in mind, okay? Going to the pound dollar, GbpUsd, we had price sell off quite nicely here, and then we had a bit of a rebound. Now keep in mind, this is a weekly chart, so we had 2 weeks where it was straight up, and then last week it gave back a little bit of that gain. Now, obviously, Brexit is playing a bit of a factor in that. I think it's artificially pushing price down, and as you can see, going back, price hasn't been this low since. Well, it just hit a new low here. Or I'm sorry, let me take the data dividers off. We have an old low right back here where we just failed to get last week, and that comes in the start of 2017. So we have an old low back here about 2 years ago that we're about to run through, and you can see it right in here. We just got shy of that low there, ran back up, and then now we're falling back in the range. So going on a daily, I would assume that we're probably going to continue to fall off, and as long as price continues lower than 121.40, we'll see price probably want to get underneath these lows by the end of the week. Now, keep in mind, anything's possible because a lot's going on in the UK right now. Brexit is a bit of a mess. There's a deal, there's no deal. I don't know what's going on. So just be careful on that one. But looking at this, it does seem that if we trade below 121.40, I think we're probably going to see suppressed prices. So, looking at USCAD real quickly, very, very tight range for all of August. This from here is from August 1st to August 31st. You can see big tight range in here. One time it poked its head up above and was rejected instantly. Now with this push up here in the US dollar, we should see USCAD wanting to follow suit and really making a run for it. So they're really building price up. Now, what's happening this week? Obviously, we have the Canadian interest rate decision. Now, from early polls, it looks like the dollar, that they will not be raising interest rates, but I don't know that they're going to be lowering them either. They may keep it the same for at least one more go. The Canadian economy came out with some fairly strong business news drivers here recently, just about a week or two ago, and so they could be taking that into account, saying that the economy is starting to bounce back and that they may just keep interest rates where they are, or they could follow suit with the U.S. and lower one quarter basis point as well too. So we're going to find out here on Wednesday, and until then we're going to see this thing suppressed. But keep in mind, look what the U.S. dollar is doing. It is running up very aggressively. It's going to be pretty tough to keep the U.S. dollar going the opposite way with that U.S. dollar running. The Canadian dollar going the opposite way with that U.S. dollar running higher. So I believe this is naturally just going to get pulled up just due to the strength of the U.S. dollar, and I believe we'll see these highs ran out very aggressively, and maybe we'll even get above these highs up into here. I'm going to put this on the chart for now. It's been up there for a very long time, so we'll hopefully it'll actually finally run those highs. So we'll watch for that. But that's what I'm looking at, continued bullishness, but I think they're just going to keep chopping this thing sideways for the rest of the week. And you can see, they're coming down in this consolidation range here for, like I say, this is all of August in here. And every single time they've dropped price, they've ran it right back up into this range here. So I would expect they'll probably sell off one more time, gather some more longs, and then they'll start pushing this thing higher. Okay, real quickly, you can see gold in here. Gold has obviously been on a tear with the uncertainty with all the trade wars and everything else going on in the U.S. Now, here's the thing. We have a big bullish price direction in the U.S. dollar. We also have a big bullish price direction in gold. So typically, these two don't mesh. If U.S. dollar is going down, gold should be going up, and vice versa. If U.S. dollar is going up, gold should be going down. So I think this latest surge on U.S. dollar, we could push gold into this 1508 level. I don't necessarily think we're going to see it get much lower than these lows in here, but I'm definitely not going to be long on gold quite yet. Now, long term, as long as these trade wars are going on, I'm fairly bullish gold, and I ultimately believe we'll be trading back up into this range. Now, gold is obviously, we just came into this area here. Naturally, there's some major areas of resistance up in here. Naturally, we should retrace a little bit, and that's where we could see gold move back down into this area here going into this week. Could go even lower, don't know yet. But I think ultimately we could see a very bullish push higher as long as there's still continued uncertainty with these trade wars. And I did hear over the weekend that it did sound like they were starting to come to some agreements. So whether or not that actually pans out is another story. We'll probably find out Monday or Tuesday. But if that's the case, then we could see gold really lessening and making a bit deeper run. So watch for that. I'm going to hold off my bullish stance on gold for just a little bit, at least until we see what happens after this Friday NFP and the continued soap opera of these trade wars. Okay. Lastly, going to wrap up with oil quickly. Oil has been in a big downward slide. Again, same story, but opposite of gold. As the uncertainty persists in the global markets, everybody flocks into gold and all the precious metals as a safe haven. But with oil and manufacturing numbers and uncertainty with retail and major manufacturing, obviously oil takes a bit of a hit, and so there's a little bit of uncertainty there, and so that's why you see the big decline in oil. And it started right about when Trump announced the trade wars. So you can see it's really starting to correct, and last week we had a nice bullish move up with only for it to finish off and give up about 50% of the range that it had created on the week. So you can see here, fell back right to the middle of the range and almost closed. So it gave up about 50% of its range from last week. I'm not super bullish on oil. Yes, there's a few factors out there that are contributing to its artificial suppression down, of course, but I think if you look in here, we've got several lows in here that I believe they want to make one big push below, and I think now's the time they're going to start doing that. Oil naturally makes a high of the year into October, so just be aware of that we could see September, October, artificially keep this thing a little bit higher. I don't believe we're going to start getting above these highs in here. But after October, I think that's where we're going to see price start to shoot down into here, and we'll probably finish off the end of the year down in this area here. So it's going to take them a little while, obviously, to do this in here, but I think by the end of the year, we'll be down into here. And then usually it's the start of the year that really starts to push things higher. And I'll just get you to go back right back to here in 2008 to the low December 2018, and then exactly what price did throughout for the next 4 months into the start of last year. We had a huge bull run. I wouldn't be surprised if we see something very similar. So something like this to cap off the end of the year, somewhere down around here, and then hopefully next year we'll start to see something like this. Okay. So that's what I'm looking for on oil. Again, I'm definitely not super bullish on oil. I believe, if anything, we'll probably see price down to here towards the end of the year. We'll have to wait and see, obviously. But if we go out to a weekly, you can see overall, right, we're just a very, very nice bullish price. Okay, and I think we're going to continue to see this going forward. And, you know, I believe we're not going to see it anytime, you know, in the next year or two, but I would say maybe in the next, you know, by 2025, potentially, we could be all the way back up to $100 oil again. You never know. Stranger things have happened. Look at the big run since 2015, obviously. So where are we now, 4.5 years later, from $28? Well, we're obviously almost double that at $55 right now. So you think that another 5 years, what's double 5 years? 55, 110, and that puts us right up into this range in here. So anyway, that's where we're going with that one for now, folks. And I'll have to leave you at that. Again, take it easy this week. There's nothing out there that's you know, can't wait for at least one more week. Again, it's very volatile come Wednesday, so take it easy. And hopefully you guys will stick around and stay solvent for another week. That's the name of the game. And summer trading's almost over. 1 more week to go, 5 more days, and then we'll be back into the trends of the fall. So hopefully you guys have a great week, and I'll catch up to you next Sunday with another recorded session. Thanks for watching. And sorry, one more time, if you guys haven't already, go ahead and subscribe down to here. Give me a like, give me a comment. Let me know if you like what you're seeing here. And I can give you some more, or I can give you some different stuff. Whatever you want to see, let me know. Thanks, guys. Appreciate you watching. Take care.